In a landmark move that could redefine the future of digital currency, President Donald Trump has signed an executive order establishing a government-controlled reserve of Bitcoin. This decision, which marks a significant step towards mainstream acceptance of cryptocurrency, is set to have far-reaching implications for the financial and technological landscape of the United States. The order not only solidifies the US government's stance on Bitcoin, but also signals a new era where digital assets are recognized as strategic financial instruments. The government's Bitcoin reserve, a digital Fort Knox under President Trump's directive, the US government will retain approximately 200,000 Bitcoin that it has already seized in criminal and civil proceedings over the years. According to David Sachs, Trump's newly appointed crypto czar, these Bitcoin holdings will not be liquidated, but instead kept as a store of value. The US will not sell any Bitcoin deposited into the reserve. It will be kept as a store of value. The reserve is like a digital Fort Knox for the cryptocurrency often called digital gold, Sachs announced on social media. This statement underscores the administration's intention to treat Bitcoin as a long-term asset rather than a speculative investment. Full accounting and strategic accumulation of Bitcoin. One of the key provisions of the executive order is a mandate for a full accounting of the government's Bitcoin holdings. Sachs emphasized that these holdings have never been fully audited, and a comprehensive review is necessary to understand the extent of the government's digital asset portfolio. Historical records indicate that the US government has previously sold approximately 195,000 Bitcoin over the last decade, generating around $366 million in revenue. However, at current market rates, these Bitcoin would be valued at approximately $17 billion. This staggering price discrepancy highlights the missed financial opportunity of past liquidation strategies. To address this, the executive order empowers the Treasury and Commerce Departments to develop budget-neutral strategies for acquiring additional Bitcoin. This could include strategic purchases during market dips, accumulation through legal asset seizures, or even partnerships with private sector entities specializing in cryptocurrency asset management. Trump's changing stance on Bitcoin and cryptocurrency. Trump's embrace of Bitcoin represents a stark contrast to his earlier skepticism. A few years ago, he had dismissed Bitcoin as a scam, expressing doubts about its legitimacy and potential as a store of value. However, in recent years, his position has shifted dramatically, earning him the informal title of the crypto president. Several factors contributed to this transformation. The cryptocurrency industry played a significant role in Trump's electoral victory, with wealthy digital asset investors backing his campaign. Many in the crypto community felt targeted by regulatory actions under the previous administration and saw Trump as a more business-friendly leader who would foster innovation in the sector. During his campaign, Trump made several pro-crypto promises, including reducing regulatory scrutiny on blockchain companies and integrating cryptocurrency into national financial strategies. Establishing a Bitcoin reserve was one of the most ambitious pledges, and his administration has wasted no time in following through. Implications for the crypto industry and financial markets. Trump's executive order has been met with mixed reactions from financial experts and crypto analysts. Supporters see it as a crucial step toward legitimizing Bitcoin and integrating it into the broader economic framework. Critics, however, question the long-term viability of such a policy and whether the government should be actively involved in cryptocurrency speculation. One major impact of the order is its potential to stabilize Bitcoin's price. Historically, government holdings and regulatory clarity have influenced investor sentiment. By establishing a Bitcoin reserve, the US government is signaling its confidence in the asset's long-term viability, which could encourage institutional adoption. Despite this, Bitcoin's price did not experience an immediate surge following the announcement. Shortly after Trump's executive order was signed, Bitcoin was trading around $86,000, reflecting market caution. While the move was seen as positive, investors likely want further clarity on how the reserve will be managed before making significant trading decisions. US digital asset stockpile. Expanding beyond creating a Bitcoin reserve, Trump's executive order establishes a US digital asset stockpile. This initiative will allow the government to hold other cryptocurrencies seized in legal proceedings. While Bitcoin remains the primary focus, the stockpile will also include lesser-known cryptocurrencies, such as XRP, Solana, and Cardano. This decision follows Trump's surprise announcement that he wants the government to maintain holdings in these digital assets. The announcement initially caused a brief surge in crypto prices, as investors speculated about future government involvement in alternative digital currencies. Regulatory shifts. A new era for cryptocurrency governance. Beyond the establishment of reserves, the executive order represents a broader shift in US cryptocurrency policy. Trump has expressed his desire to pass industry-friendly legislation that supports blockchain development and digital asset adoption. Under his administration, the Securities and Exchange Commission, SEC, has already started dropping enforcement actions against major cryptocurrency firms. This marks a reversal from the previous administration, which had pursued stringent regulatory measures against the industry. On Friday, Trump is set to host a crypto summit at the White House, where key industry leaders will discuss regulatory policies, market growth, and future government involvement in blockchain technology. Bitcoin's role as a hedge against inflation and national debt. Bitcoin's built-in scarcity, capped at 21 million coins, has long been cited by supporters as a key reason for its value. Many investors view it as a hedge against inflation, especially in an era of rising government debt and monetary expansion. Some proponents argue that a strategic Bitcoin reserve could one day help offset the national debt. If Bitcoin continues to appreciate in value, it could provide the US government with a substantial financial cushion. While this idea remains speculative, it has gained traction among policymakers and economists interested in innovative approaches to fiscal management. Conclusion: the future of government-backed Bitcoin reserves. Trump's decision to establish a government Bitcoin reserve marks a turning point in the US approach to cryptocurrency. While the full impact of this policy remains to be seen, it is clear that digital assets are becoming an integral part of national financial strategy. As the world watches how the US government navigates its new role as a Bitcoin holder, other nations may follow suit, leading to a new era of cryptocurrency-backed financial policies. Whether this move ultimately strengthens the economy or introduces new challenges will depend on the execution of the strategy and the evolving global regulatory landscape. For now, the message is clear. Bitcoin is no longer just an outsider's asset. It has officially entered the realm of government finance and policy.